Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1162A, and today's date is December 26th, 2016, and the title of the episode is Germany's Bundesbank repatriates gold at a much faster pace to prepare for the economic crisis. Let's get into the economic collapse financial news. Now, over the past year, we've been seeing that banks, Deutsche Bank, Nova Scotia, UBS, and many others, they've been manipulating the precious metals market, the LIBOR interest rate, and now we come across that Goldman Sachs, well, they were ordered to pay $120 million, which is not really a lot of money because what they were actually doing is they were caught manipulating the US dollar. Goldman Sachs, they were levied the civil penalty to settle charges that it often tried to manipulate a global dollar benchmark for interest rate products over a 5-year period. Coming from this report, citing the Commodities Future Trading Commission's report, stated that Goldman Sachs engaged in its illegal activity in an attempt to manipulate the U.S. dollar international swaps and derivative association fixed benchmark. Now, the firm's operatives didn't even attempt to hide their actions from the regulators. Goldman traders made little effort to disguise what they were doing, and they were just out there doing it. Now, of course, they paid this little tiny $120 million, but we can see right now what they were doing. They made billions and billions off of this. And actually, when other banks look at this saying, hey, this is actually worth it. If we go ahead and we manipulate like the precious metals market, the LIBOR market, the US dollar market, all we have to do is pay these small fines, but we can make billions off of doing this. So this really is not stopping the banks from manipulating. And what we're seeing right now is that the central banks, the banking system, the whole entire thing is completely corrupt. We see the Bank of Japan. Well, the Bank of Japan, their ETF purchases, they're going to top 4.3 billion yen this year. That's $36.5 billion, up 40% from 2015. Last year, the central bank bought more than 3 trillion yen worth of ETFs. The data was released by the Bank of Japan and compiled by the Tokyo Stock Exchange. Should it continue at this rate, in a few years, the Bank of Japan will have nationalized the entire market. As of this moment, it owns about 2.5% of the market cap. And we can see right now that they are doing this to control the stock market. Because if they don't, the system comes down. Actually, we see this happening in other places like Europe. They want to do it here in the United States. But of course, under the laws, it doesn't allow them to do this. But they are allowed to take the free money that is created by the Fed, pass it along to the banks, and have the banks go ahead and purchase stocks. Now, the Bank of Japan, they're one of the biggest buyers of stocks right now. And normally you would see this in a centrally planned economy such as like the USSR. But now we're seeing it in Japan, in Europe, and soon, most likely, once this system comes down. And remember, I don't think it's going to come down and just stay down. I think they're going to pump it back up. The Fed is going to come in and say, listen, we need additional laws. We need additional help here. So we need the ability to create more currency out of thin air. We need the ability to purchase stocks. And I've said this in the past that I believe that this is going to be a two-phase type of collapse scenario where the system comes down, it drops down, and the central bank, the elite, they make their case of, listen, you want us to help here? Well, this is what we need. We need more control of the system. We need to create currency, and they're going to prop the system up once again. But we know this is not going to hold. It will only hold for a little while. But what it allows them to do is take more control of the system, and then eventually the whole thing will collapse. So when you see that, you know we're heading towards that period of a total collapse scenario. Now we see out in Germany, the Bundesbank, they're repatriating their gold from New York and Paris, and they plan to repatriate their gold and have it all done by 2020. Now, very interestingly, they decided to accelerate this, where they're bringing in more gold at a faster clip. And back in 2012, people had their doubts that, wait a minute, Germany might not even have their gold. So they went and they said, listen, we need to bring the gold back. We want to undertake an audit to make sure that all gold is accounted for. And what happened was gold started to trickle in. People were saying, well, do we really have this gold? And they said, well, don't worry about it because we're going to have all this gold brought back by 2020. And then all of a sudden, for unknown reasons, they decided to accelerate this plan and bring in the gold much sooner than that. And it looks like in the year of 2017, they're going to try to bring most of it back to Germany. Now, the question is, why are they doing this right now? Why are they pushing it so hard? Do they know something that we don't? Well, we kind of do. It looks like what they're doing is they're bringing all the gold back because they're preparing for some type of economic crisis, and they want their gold, their physical gold, on hand. And we can see right now that they were planning on bringing back 1,700 tons of gold in the next 3 years. But in the year of 2016, they brought in 1,600 tons just in this year. So when we look at this, we can see they're way ahead of schedule, and it looks like they are preparing for this economic crisis, which we know as the collapse. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.